Every candle on your chart is hiding something. The footprint chart shows you what's actually inside. You get to learn how to read the auction and see the same information that makes professional traders successful. Here's my settings and how I use them in real time to have a definable, crystal clear edge in my trading strategy. First of all, let's start out with the big question. What software is this? This is the footprint chart on Sierra Charts. Fun fact, I had the pleasure to meet Trevor Harnett in 2015, who actually was the inventor and the licensee holder of the footprint chart concept back then in Market Delta. Since meeting Trevor and finding out about this chart, I've used it for the next 10 years consecutively, and it's a staple in my trading approach. Let's take a look at this chart, and I want to show you a few things in here that are very important. Let's break down each of the components of what you see. The first thing here is the candle. Each candle here shows you different information. The first part of the candle, which is either blue or gray, shows you the direction that the market has moved within that candle. So if it's blue, this could be the candle body, and if it's gray, it means the market's gone down. Blue means the market's gone up. The numbers in between, above and below the candle body, are what you would traditionally call the wick. So this is in fact the candle chart visually, but you're seeing the volume and the auction that occurred within the candle, which is the most important. When you could see inside the candles, you start to see some important information and footprints that get left within the auction that give you an edge in your trading. The next column here in the middle is the actual traded volume. And you'll notice some numbers are green and some numbers are pink. Now, these numbers are the basis of my trading execution and real-time qualification. What these numbers tell you is a market imbalance. Did more volume trade on the bid or the offer? If more volume is trading on the bid, that means market sell orders are trading with buy limit orders. Now, to illustrate this concept, I want to show you something different here on this chart. So when you're looking at a price ladder, there's a bid and there's an offer. And you could see all the quantities available on the bid or the offer, but the market orders aren't shown. They're not displayed. The market orders trade against the limits. So if you have a bid here of 71.5 with 13 contracts, in order to trade this, we have to come down to that price and you have to find a market seller which would hit the bid and make a trade form. On the opposite side, if you buy at market, you're lifting an offer because you're trading with the best available price for sale. The ratio of what's trading isn't at the same level because the market trades with a quarter point of a spread in the S&P 500. So this means that if you want to sell at market, you'll be selling 73 quarter, and if you want to buy at market, you'll be buying the 73 half. Anything else, you have to get in line with the limit orders to be part of the auction. So all the footprint chart then is showing us is the aggressive orders within the market, meaning that if this is pink, you're having heavy selling, heavy market selling trading against the bid. So even though the volume is trading with the buy limit, the aggressor is the market seller, which makes them the aggressive position in the market. The imbalance shows you on the chart whether the auction happened on the bid or the offer. And the settings that I have are custom to TRADEPRO Academy, and these settings help us identify is the aggression taking place on the buy side or the sell side. This is what we call the footprint that we want to track. It's the tracks in the snow that lead us to where the smart money is going. So this information here is color-coded only when the buy side overwhelms the sell side by a specific percentage amount, or when the sell side overwhelms the buy side by a specific amount. Every other number is left grayed out, and it's important to know that this is the total volume and not the actual imbalance amount, but I like it displayed this way on my chart for simplicity. The next piece of information that you'll see here on this chart are these white and gray lines. This is just a heat map or the recorded memory of the limit orders, the order book. And when you see a brighter bar here, it just shows us that there's more size and inventory that's anticipating to trade at these levels. So this is basically everything I have on my footprint chart. This gray box here is simply the POC, the point of control within the bar, or the area at which the most amount of volume traded. Now, these are important to me because I like to keep track of the direction they're going. And if you're getting a bullish trend, these bars or the POCs should be shifting higher as the market is trending higher. Now, let's look at the application of how this is relevant and useful for trading. This is example from the morning session. The yellow line here is the opening range. And right below, you will see that the market opened at around 68.19. And immediately we had a pretty big buy imbalance form right at this level. And this level here is 68.21. And what I do in the day is I'll manually draw a line, I'll extend it, and I'll color code it to match with the buy or sell imbalance that occurs. So we have a big buyer off of the opening bell and the market continues higher. So continuing this process here, and I will eventually show you how this turns into a trade qualifier, you can go here to copy and move drawing. So I'll throw it on every single buy imbalance as it is created in real time during the day. I don't want to get this to be done automatically. I like to be participating and doing work as this is happening because it keeps me on the cusp of the development of the auction. So it's a process I enjoy doing manually. So I'll just do this. And obviously I do it as the session is developing. All right. And wherever you see big clusters of imbalances, to me are the most important levels. So let's go ahead and draw a couple more and I'll show you how this turns into a trading opportunity. Let's get in there and cluster everything up. All right, so I went ahead and done it. These are all the buy imbalances. And what I'm looking for here now is an area where there's clusters of this activity. You can see between 45 to 49, there's 1, 2, 3, 4, 6 different buy imbalances. And 2 of these are on really high volume as the trend extended, rotated to the buy imbalance and continued upward. So what I do here is then draw a box just to visually print it for myself and for the remainder of the day. I make it a green box and then I go ahead and I extend this green box out as a drawing so it intersects with future price action. At this point, the chart might start to feel cluttered to you. You can go to and erase all non-text drawings, which will erase my box as well, sadly, but I'll just redraw it again. So here's that box, and I like that it's picking up these buy imbalances, color-coded green once again, and extended out. All right. And then what I'm looking for here is the trend to come back into this area for a long opportunity. So you could see it here. We extend up, reverse into it. Immediately, this pullback here is held within the confines of this buy imbalance. And then we rotate higher. So the market is now showing you it's not just something that you're seeing and thinking this is a real buy level that's being defended. You see the next defense by this buy candle and the entry opportunity here on the rotation in the buy imbalance level. What you could see for the rest of the day develop is that this actually did end up trending higher and exploding from this buy imbalance level for nearly a 20-point winner. Now, as the trend continues upward, you can go ahead and draw another box of buy imbalances, go ahead and highlight it, extend it, just so it works on the pullbacks. And you can see the market literally rotated right into it, taking very little risk on an entry opportunity, and it continued higher. Now, the settings that I have are proprietary or reserved for our TradePro community, but you could start out with the default settings in Sierra chart and you're going to get a really good starting point. It's a balance between getting important levels, but not too many to throw you off, because this is what I use for my limit order placement and my execution. This footprint chart to me really shows the inner workings of the auction, who the aggressor is, and as the trend continues, it also gives me entry points at price areas that are going to be defended. Why? When you have an aggressive market buyer, when the price comes back to that level, you can't assume that the aggressive market buyer finished purchasing their position, and retest the levels where there's aggressive market buying suggests there will be more market buying to defend that level. In the event we come down and we actually start to see sell imbalances and price action break below the sell area and more sell imbalances, you tend to see the early makings of a reversal and potentially even a qualifier for a trade to the downside. So this is my favorite chart. It's a footprint chart. It's on Sierra charts, and it has market imbalances. It has the candle bodies on them. It has the POCs, and it has the heat map behind it as a background. To me, this is the most reliable chart and makes up about 70 to 80% of the things I look for on execution. The rest of it is just reading the DOM or the price ladder to see how the auction is trending, to see pulling and stacking of limits, and see where market orders are actually filling in the interaction in that process for the final touch and refinement to my entry. Hope you enjoyed this video. Give it a shot on your platform. Try out the footprint chart. And big kudos for Trevor Harnett for developing this back in 2003 with Market Delta. This has been a staple in the order flow trading industry since. And big shout outs to Anthony Drager for being one of the first people to teach this information to the retail crowd. Like, comment on this video, let me know what more you want to find out about order flow. And if you want to check out our trading community, head on over to TradeProAcademy.com and join the order flow vault. We do daily morning reports and analysis, and we have a live order flow room every single weekday morning from 9 to 11 a.m. Eastern time. I'll see you inside the community. Thanks for watching, and have yourself a great rest of your day. Take care, and remember, manage that risk and trade like a trade pro. Goodbye.